Today is November 8th, 2025, and StarBucks has finally returned to the level where trends ultimately live and break out or die. And we are not talking about a bounce here. We're talking about the retest of this entire downtrend price resistance level that initiated at the start, the 116 handle. And this is where the moment where the market decides, was this just oversold relief or the beginning of a reversal? And since March, StarBucks has been trapped under a single descending price resistance level over this entire span of time. And every rally has been sold, every breakout attempt completely rejected, and every bullish thesis has been muted up until this span of time, and the price flushed down into the $77 to $79 demand floor. And instead of accelerating lower, the buyers showed up, and while price made a lower low, RSI has now made a higher high, where you have a nice clean divergent low with positive and or bullish divergences constructed on multiple continuational momentum indicators. So momentum is refusing to die at the apex here, and now we are pressing into this 236 fib retracement level, and local supply from September ultimately overcutting its 50-day moving average. And this just isn't resistance. This is the front door of the trend here. Break it, and the narrative changes, fail, and the downtrend continues on schedule. And with RSI beginning to rise up above its 50 handle, and the MACD starting to cross upward, volume expanded on these additional green days, and not so much the red days. And that could be interest, where momentum isn't dominant yet, but it has potential energy. And I believe a solidified green infused candle breakout above the 8650 handle will ultimately put in control of the bulls. Make no mistake about it, the ball is in the court of the bears as of now. And short sellers who have their grip on the price action of this stock. But pop that level, and you'll have short sellers thinking otherwise, where the bull cycle completely could rebuke. Or a rejection here, and ultimately taking out the 8330 handle in confluence of its 50-day moving average, and the downtrend could continue into the winter. And make no mistake about it, StarBucks is not just testing a technical trend line, it's testing loyalty. As traffic inside the Starbucks store is slowing, margins are thinning, and the brand perception is ultimately shifting. If and when the chart rejects here, it won't be because of a candlestick. It'll be because the culture moved on faster than the company did. And charts always tell that story before the headlines print.